Are you tired of worrying about your 2023 farm profits? Take control of your investments and maximize your returns. Let Advanced Trading help you create a marketing strategy to protect your investment and reduce market risk. For over 40 years, Advanced Trading's non-predictive approach has helped farmers secure and extend profits regardless of market volatility. Our team is positioned to help you make the most of 2023. You never stop working, and neither do we.
Good morning, my name is Drew Moore, and I've got Brian Basting and Michael Reginelli in studio here with us today. We just received the July USDA WASDE numbers and look forward to having a discussion here. Before we get into the questions, D's corn's down 19 cents, looking at levels we haven't seen since fall of 2021. No beans down 30 cents, and D's wheat down 22 cents. So a little bit of blood on the streets, as they say today. Post USDA report. First question for Brian here. Brian, what did the report have to say? Focusing on the soy complex side.
A bit of a surprise this morning, Drew, from the standpoint of USDA adopted the 52 bushel trend yield for a national average yield on beans. Of course, we're here in the middle of July. Beans are not made in July. We got a long way to go here. I think we're seeing more double crop go in. So USDA took the conservative stance. Pardon me, a 52 bushels nationwide yield.
Sure.
That's the first part of the equation. The supply is higher than expected by the trade. The trade was looking for that yield to come down maybe a half to a bushel from what it was there in June.
Right.
The other side of the equation, Drew, is more concerned about demand for new crop. USDA took exports down 125 million bushels from what they were projected to be in June. What the USDA is saying is that we're seeing some cracks in the demand armor, if you will. They took Chinese demand and for next year imports down 1 million tons.
Okay.
They also took some other countries down a bit. They're basically concluding, although they didn't say it, high prices cure high prices. And these bean prices have come up quite a bit, obviously with the stronger than expected response to that acreage number.
Sure.
So two sides of that equation, Drew. USDA left that carry out for 2023-24 at 300 million bushels. There's some in the trade, Drew, are under 150 for new crop. So it's an evolving story. I don't want to say that this is it for the soybean market. As the viewers know, we don't make a bean crop in the middle of June,
right.
or middle of July, beg your pardon.
Right.
The next 6 to 8 weeks, very critical weather-wise. A lot of moving pieces there.
Absolutely. Thank you, Brian. Michael, how about on the grain side of the ledger? I know the big topic was what is corn yield going to be?
Yeah.
What did the USDA have to say?
USDA took corn yield down. I think the average estimate was 176.5 is kind of what the thought was. I think everybody, based on crop conditions and the dryness that was experienced in the Midwest in June, expected that yield to come down. So they did at least begin that process. USDA came in at 177.5, about 1 bushel higher than what the average trade guess was.
Sure.
Seems like it's trending in the right direction. We'll get survey data here in coming months. So I think that'll give us a little better look. But it does seem like things have stabilized a little bit. I think the trade obviously was factoring in something close to what the USDA gave us. Really, there wasn't a lot else in the corn story. Ending stocks were fairly close at 2.26 on new crop to what the market was looking for. We did see old crop carryout come down, or stocks come down a little bit. That was somewhat expected after the tighter June 1st stocks that we got on the 30th.
Sure.
So I think that was probably expected to some degree. But world corn stocks actually did grow a little bit too, which would also likely lean on the market a little bit and be somewhat bearish. The wheat side of the balance sheet is a little bit different here. Production and ending stocks both grew for this upcoming 23-24 crop. Harvest ongoing, tends to lean a little bearish, but we did see world stocks come down pretty substantially. 266 million metric tons, average guess was 269. Obviously, with the higher production numbers in the U.S., that's not where the cuts are coming from.
Right.
Argentina, Canada, and the EU all saw 2+ million metric ton cuts. So smaller crops and tighter stocks in other parts of the world tightened up that number. So a little bit of an offset from the bull to the bear side.
Gotcha. So going back to corn. I mean, it's hard to find a comparison, right? Where we're dry, through June. I mean, you could maybe look back to last year a little bit. and then finding ample rains in critical time periods. So looking at new crop balance sheets, looking at December forward spreads, November soybean forward spreads, new crop forward spreads, what likely plays out moving forward, or what's the market telling us right now?
There's going to be a lot that we have to figure out still. Brian mentioned we're going to make the bean crop in August. We need to see how the balance of July plays out, especially as more corn kind of gets closer to pollination, and we kind of better define the yield.
Sure.
But what we do know is that there's obviously demand headwinds in both corn and beans, according to the USDA, and you feel it on the lack of flashes, and when you look at the weekly sales and inspections too. So there is a little bit, there are some demand headwinds expected as we move forward. That 2.2, 2.3 carryout on corn, if realized, would be the largest carryout we've had in a number of years. It's heavy. It justifies lower prices. It also likely justifies wider spreads, though. So when you start thinking about spreads in the new crop time frame, the other thing I'd mention, too, is interest costs are higher than what we've contended with in a number of years.
Sure.
And so, full carry, for Dece March corns, 30 and a half cents, probably 28 cents on Nov Jan beans. Based on where spreads are priced in today, there's a ways to go if we're actually going to challenge those numbers. But again, there's a lot that can change, not just on the production side, but the demand side as we move forward, particularly if that 300 million bushel carryout on beans begins to come down. Corn feels, at least at face value, more comfortable as we work our way into the fall than beans do. But you don't hear a lot of people saying that 52 bushel per acre bean yield is almost a guarantee, or that there's opportunity to move that number higher. And the demand cuts on beans, I know, will be met with some skepticism, but the reality is, if those acres numbers that we got on June 30th are right, we just lost 4 million acres. And so we're just going to have a smaller supply base to play with as we work into the fall.
Sure. No, thank you very much. That's good stuff. Brian, moving over to weather, speaking about kind of the forward curve here, next to 5 to 10 days are pretty critical for some areas of the Midwest that certainly need rain. What's the weather forecasts look like, and what are you seeing from the models you look at?
It seems like, Drew, at the moment that we're getting more rainfall in the southern 2/3 of the Corn Belt, for lack of a better geographical reference.
Sure.
The northern 1/3, the northern plains, would even stretch that into Canada, is drying out, as Michael highlighted. USDA did cut Canadian wheat production 2 million tons. So I'm a little bit concerned about that wheat production number up in the northern plains. But getting back directly to your question, short term, it looks like we got some moisture coming through the Midwest as we tape here today. It also looks like we've got some chances this weekend. So the southern 2/3 of the Corn Belt looking pretty good for pollination, at least moisture-wise, Drew, into the weekend. As Michael said, the next 2 to 3 weeks are going to be critical for corn pollination. Moving further north, a little bit more sketchy there, maybe a little closer to normal. But I'd underscore Michael's comments, keeping in mind a lot of volatility still potentially ahead of us.
Right.
Defend your balance sheet if you're a producer. Give yourself flexibility. Put a floor underneath these markets, but give yourself flexibility, but continue to manage price movement rather than predict price movement.
Absolutely. Thank you, Brian. Shifting focus a little bit over to wheat, world wheat stocks. What's your outlook in wheat classes moving forward? Obviously, we continue to see Black Sea issues persist, although, I don't know, the trade seems somewhat muted to some certain instances, it seems like.
No, you hit the nail on the head, Drew. There's a feeling at this point that seems to be growing amongst the trade, is that the Black Sea Grain Initiative, the fate of that is not looking really good right now. We may be surprised. It expires on July 17th.
Okay.
So that has kept the flow of grain, of course, moving out of Ukraine. That could change things a bit if that is discontinued or not renewed, for lack of a better phrase. But I would highlight a couple things. We've seen some really nice soft red winter yields here in the Midwest. We've also seen some higher than expected hard red winter yields out west. Still poor, I don't want to give the impression, but the USDA did increase our domestic hard red winter production and domestic soft red winter production from what it was in June, which is encouraging from that standpoint domestically. The carryout, as Michael said, higher on all wheat. I think moving forward, Drew, we're looking at a world market now focusing more and more on Southern Hemisphere, what's going to happen in Argentina and Australia.
Right.
USDA did lower Argentina production 2 million tons today, and they're keeping a close eye on Australia because of the close correlation between El Nino and drought in Australia. So going forward, the wheat market, even though the supplies worldwide, as Michael highlighted, are down, below trade expectations. They're still ample, and we don't have an event, if you will, now to give that wheat market ignition fire on the upside. That's why we're watching the Southern Hemisphere closely. In a nutshell, wheat feels heavy at the moment, as you mentioned earlier, Drew.
Thanks, Brian. Michael, last question for you. Any other items that stood out on the report that viewers should be cognizant of? Any cash market items to note or marketing ideas for the viewers?
I mean, yeah, it does feel like old crop corn basis has been firming up kind of in the central and certainly the eastern belt. I think it's led by a bit of an ethanol push here, just week on week. We saw the market rally in June. We flushed out some farmer bushels. We had a big July forward inverse. Bids have all rolled forward to the SEP on corn, most to the Q and or the X on beans at this point.
Right.
And the market has set back certainly on corn. So, if there's still farmer bushels out there, it's going to kind of become a balance of basis and spreads trying to make it work. We don't have a big inverse SEP Dece. We're probably not going to have a big inverse SEP Dece. So really it's going to come down to basis and spot coverage. But the ethanol bids coming up have helped support rail values a little bit. Stocks on paper did tighten up, like I mentioned, on corn for old crop today. Somewhat expected, but it's really going to be about bridging that gap to new crop. If we stabilize the corn yield and we have this new crop supply coming, some of it's going to come down to timing if you're on the demand side and how much you need to buy to bridge that gap effectively, because you don't want to own high basis old crop bushels for a day longer than you can replace it with cheap new crop.
Yep.
So it's a timing game right now.
Right.
On the bean side, it's a little surprising that the old crop bean carryout actually increased, like Brian noted, especially with the tighter stocks on June 30th. You look at the cash markets, it doesn't feel like there's a lot of available beans floating around in the marketplace. We've had high prices. Farmers have moved a lot of old crop beans. I think ownership's pretty thin out there, and cash crush margins are outstanding. $1.60 plus July, rolling forward August SEP, really strong margins. So they're not going to want to, despite the demand headwinds and the lack of exports, I should say export demand headwinds on beans, processors aren't necessarily going to want to miss bushels. So it doesn't feel like a hyper bearish bean market, especially if that 300 million bushel carryout begins to drop, then every bushel becomes that much more valuable from a flat price standpoint.
Right.
So there's still some dynamics as we kind of work our way into late summer, coming out of relatively tight carryout years on both corn and beans.
Absolutely. Very good. Thank you both today. And thank you guys for watching at home. And if any questions, please reach out and have a great day.